believer in business and personal development, to which she strives to improve the community around her. Passionate and committed to all her clients, with a wealth of knowledge and a lovely person, please welcome Sarah Ringeri from Books with Balance.
Ooh. Thank you. That was lovely, Anna. Thank you. Books with Balance aims to educate and empower businesses and individuals to control, understand, and achieve healthier financial outcomes in real time. We find the tranquility within your bookkeeping tasks for you to focus on growing and maintaining your business. Today, I wanted to talk to you about cash flow. Cash is king, right? Make smarter spending decisions, and understanding to plan your cash weekly or monthly will immediately improve your cash flow. As your business develops on a balanced cash flow to stay in operation. Good cash flow planning will highlight if there is a financial strain around the corner and prompt you to prepare for what is coming. This could mean delaying payments, reducing expenses, or finding new income streams. Managing cash flow is about your day-to-day trading activities and having control over what is going to be spent, sold, and to have healthy business relationships. This will help your business run smoother. Closely monitor this to ensure you have enough cash to pay your bills, meet tax and super obligations at the very least. If the amount of cash coming in exceeds the amount going out, your business has a positive cash flow, which indicates that your business can cover costs as they fall due and allows you to use your money wisely. Even putting some aside for a rainy day is beneficial. However, if your amount outgoing exceeds the amount coming in, your cash flow is negative. This means you need to carefully monitor how you are spending your money. A profitable business can still have cash flow issues. Below is a table of a few examples of what affects profit and cash records. Profit is the amount of revenue that has been earned after deducting all expenses that have been incurred, excluding GST, whether cash has been exchanged or not. It also considers the non-cash expenses such as depreciation. Cash is generated from all inflows and outflows, including GST, which includes buying or selling fixed asset expenses, owner drawings, loan repayments, taxes owed, and more. Cash flow reporting is looking back at your past profit and loss and balance sheet so it helps discover patterns of your business and how much money you need each month to cover the costs. This helps with budgeting and understanding money flow. Cash flow forecasting predicts what cash can be coming in and out of your business in the future, generally for a 6 or 12-month period or up until the end of financial year. This is done by constantly reviewing your cash and by having due dates on the sale invoices, supplier bills, allowing you to navigate through any difficult periods. I've created an example of what a monthly cash flow forecast looks like for my new small consulting business for the next 6 months. This business has only been running for a few months, so I am basing these figures off those months that have happened in the past and what I plan to achieve in the next 6. E.g., spending money on advertising, some office repairs, possibly a new staff member, a new laptop, even a bookkeeper, and rent, to list a few. A reminder, these figures are an estimate, so you can change them throughout the months for accuracy. The cash coming in, I know on an average, my monthly income is $11,000 for the moment. However, I would like the second wave of the year to grow, so these are my targets. Cash outgoing. You can see these are straightforward and my costs are minimal. My April and May are at a negative, but my months moving forward are quite positive. If I feel I will have some concerns, I will consider pushing some expenses out to the following months if necessary. Now, that's all pretty straightforward when business is predictable. but we can never be 100% certain this plays out as we had hoped. I would suggest playing around with some scenarios that might help you out in the next 3 to 6 months. Best and worst case scenarios, possibly review those subscriptions. Can you go on payment plans? Is there any other streamline of revenue you can develop? Next, I would like to speak to you about utilizing your accounting software, as they have some great features. To get the most out of your software's reporting, it's important to capture all your business transactions frequently. One is connect accounts. Make sure you have added and linked all bank feeds to all your business bank accounts, including Petty Cash, PayPal, Stripe, Shopify, etc. 2, reconcile frequently. Now that your bank feeds automatically feed through the software, make a habit of reconciling weekly. 3, receipt management. Download the software's apps on your phone and take photos of your receipts, or even get yourself set up on HubDocs, which comes with the Xero subscription, and start capturing and storing all your supplier bills receipts via email, upload, scan, or mobile photo captured features. 4, correct allocation. As you establish your business, you will work out what you want to report on specifically and what can be reported on as a general account. Keep your account code simple and understandable. That way, when it comes time to allocation, you can do it with confidence. And the last one, due dates. All sale invoices need to have due dates on them, with whichever payment terms you want to follow. If you're aware that the invoice won't be paid by its due date, note an expected payment date on your cash flow forecast or on the invoice itself, which can be done in Xero. Most supplier bills will show a due date. Enter them in the software ahead of time so you can project your spending for the next week or month, even if you've already paid to the bill. The next 2 slides are my top 4 customer and supplier management tips. The first one, customer management tips. 1, good procedures in place to encourage prompt payments. 2, send out invoices as soon as the job is completed. 3, set up payment terms and be clear from the beginning. 4, don't be afraid to stop supplying or even sack a customer. Now, supplier payment management tips. 1, utilize your payment terms. Pay amount when it's due. Don't be afraid to negotiate new payment terms. 3, tighten controls over overpayments or duplicate payments. And 4, regularly compare supplier prices and services. But the main tip of all is relationship management with your suppliers and customers. Thank you all for your attention, and I hope you could have taken something away from today's presentation. Thank you.
Thank you so much, and such a good time to have this presentation as well, Sarah.